Cathie Wood's ARK ETFs have dumped more Tesla stock and loaded up on Palantir and Teladoc shares in the new year as they seek to bounce back from a rough 2021. So we understand that many investors are wondering why Cathie Wood sold her shares. We're going to figure it out, so stay tuned. The Star Stock Picker dumped more Tesla stock as it soared after the electric vehicle maker posted record fourth quarter deliveries. The investment firm sold 39,262 shares worth about $45 million at the start of January 3rd trading from two of ARK's ETFs. That's according to her trading newsletter. Wood's firm cashed in on millions of dollars worth of Tesla stock in 2021 as well. Even so, the EV maker remains the biggest bet in three of the firm's funds, including the flagship ARK Innovation ETF. Now, this looks a bit confusing. What's really Cathie Wood's plans for Tesla stock? Wood has previously predicted Tesla shares could hit $3,000 apiece by 2025. Now, the stock has risen by about 57% in the last 12 months. Also in the new year, ARK Invest ETFs have loaded up on shares of virtual health company Teladoc, which has tumbled 56% in 12 months. On January 3rd, the firm bought nearly 80,000 shares of the company. We haven't gotten any sort of explanation from any of the representatives from ARK Invest. In a December blog post, Wood said that tech stocks in ARK's portfolio, like Teladoc, are in deep value territory. That's as much as we've got from ARK Invest. So far in 2022, ARK also bought up shares of Palantir, the analytics company founded by Peter Thiel and beloved by retail traders. In total, ARK purchased 442,456 shares worth about $8.2 million, based on January 3rd's opening price, of course. In other notable New Year's trades, ARK purchased 345,771 shares of commission-free trading app Robinhood, which went public in 2021, and sold 359,577 shares of social media company Twitter. So could it be that Cathie Wood is disposing Tesla shares so that she can diversify her investment portfolio? Well, Wood rose to fame in 2020 when her flagship fund delivered eye-popping returns of 150% and amassed more than $17 billion in assets under management. In the past 12 months, however, the fund has sunk about 27%. Maybe Wood is trying to do things differently by selling some Tesla shares to diversify her portfolio. What if she's realized that it's time to do things differently? We know that sometimes circumstances necessitate changes, and maybe that's what Cathie Wood is doing. But then this is not the first time that she's selling. ARK Invest exchange-traded funds have been shedding Tesla stock since the start of September, when its shares began to ascend, which allowed Wood's fund to book profits. Wood is known to sell Tesla stock when it outperforms within a certain duration because not doing so would not be wise portfolio management. ARK Invest has been booking profit in Tesla since September 2021, selling over $3 billion worth of shares after years of piling up shares in the electric vehicle company at far lower levels. As you can see, Cathie Wood's ARK Invest has been at it for some time now. The sale didn't begin this year, and everything seems to be pointing towards portfolio diversification. For instance, back in November, ARK Invest sold Tesla's shares so as to increase their stake in Zoom Video Communications after the poorly received results by the video communications company. In the flagship ARK Innovation ETF, ARK, the fund sold $136 million of Tesla shares while buying $112 million of Zoom. In the ARK Next Generation Internet ETF, the fund sold $23 million of Tesla to buy $22 million of Zoom. In October 2021, Cathie Wood's ARK Invest offloaded a massive stake in Tesla, dumping more than $600 million in shares to instead splurge on struggling stocks like Coinbase and Robinhood, thus doubling down on her staunchly bullish stance on disruptive tech despite growing skepticism around the strategy on Wall Street. According to ARK's daily transaction reports, the firm funds sold another 381,000 shares of Tesla that month, which represents a stake worth about $297 million. The sales have been going on for quite some time now. Following a wave of Tesla selling last year, Wood said ARK likes to trade around a stock's volatility, taking advantage of low prices to buy and selling when she believes prices could take a hit. Well, as much as Cathie Wood could be selling Tesla shares so as to double up on other stocks, investors could be concerned about her latter statement. Does Wood think that Tesla's stock price will take a hit? Certainly not. Wood has maintained her bullish view of Tesla hitting the $3,000 mark by 2025, and Tesla certainly did well in 2021 as it posted over 936,000 electric vehicle deliveries, and 2022 is expected to be even better. It's been a banner year for Tesla, from buying $1.5 billion worth of Bitcoin to the partnership with Hertz, which made the company hit the $1 trillion market cap, to it navigating supply chain disruptions better than many of its peers, thus enabling strong deliveries. The auto manufacturer certainly dominated headlines in 2021, with CEO Elon Musk selling billions of its shares. Tesla Chief Executive Officer Elon Musk, who has sold more than $15 billion worth of shares in the company since early November, said that he was almost done with his stock sales. The billionaire had made confusing statements as to whether he might or might not be done with his stated goal of selling 10% of his Tesla shares. Musk said on November 6, 2021, that he would sell 10% of his stake if Twitter users agreed. Tesla's shares, which were hovering near record highs, lost about a quarter of their value soon after. Elon Musk was just exercising his stock options, which are set to expire sometime this year, to pay taxes. Musk, who moved the company's headquarters from California to Texas in 2021, also criticized California for overtaxation and overregulation. Now, a lot of analysts say that 2022 will continue to be favorable to Tesla, with the electric vehicle company stock potentially rising nearly 30%, thanks in part to increasing China demand. Musk and Tesla have navigated the chip supply shortages better than any automaker globally over the last 6 months, which is why Tesla is in a clear position of strength heading into 2022 with an inflection point year ahead. The stage is now set for EVs to take a significant step forward in driving customer adoption in this green tidal wave, with many winners as a part of the biggest transformation to the auto industry since the 1950s. China is a key variable in the Tesla bull thesis, which will represent 40% of deliveries for the EV maker in 2022. It's the biggest market for top luxury cars. Looking at the numbers sold of the top models from Mercedes, BMW, Audi, Porsche, and a handful of others, we expect Tesla to thrive there. While the chip component shortage remains a headwind for Tesla and every other automaker, this is a transitory issue. The second driver for Tesla's performance in 2022 is the opening of new gigafactories in Berlin and Austin, which will alleviate the bottlenecks of production for Tesla globally. By the end of 2022, Tesla is expected to have a capacity of close to 2 million units annually. While supply chain issues have been a problem for overall unit growth for Tesla in 2021, over the coming year, this dynamic will significantly moderate, with potentially 1.4 million to 1.5 million units now within reach annually for 2022. Tesla also looks to expand into massive volume production of those 4680 battery cells at Gigafactory Texas and Gigafactory Berlin simultaneously. The automaker is still buying as many battery cells as it can from suppliers, but we believe its own cell production in 2022 is going to be a difference maker. Tesla is expecting to grow by 50% for a number of years and even surpass that number in the next 2 years. This growth is both in volume and in revenue while steadily increasing margin. You can never bet against Elon Musk. Tesla has some products and projects in the pipeline that can help with these goals. Let us know what you think via the comments section. And as always, remember to like, share, and subscribe if you enjoyed the video. Stay safe, and we'll see you next time.